Hello friends, welcome to my channel. I'm going to today discuss another trade which I had taken and exited today itself. So I had bought and bought call option 32,000 Bank Nifty and put 32,000 Bank Nifty. The rationale of taking this trade, I took this trade in early morning. The rationale behind taking this trade was that today I was expecting the VIX to go up because there is lot of uncertainty. There is news of lockdown, and there is also speculations about GST collections going down. So I expected the markets to do badly, which of course has not happened. Anyway, my trade was, I was basically trading the volatility. So we buy call and put at the same strike price. Let's not worry about the name. So we at the same strike price we buy call and buy put only when we expect the volatility to grow up. So this is not a directional trade, rather we are expecting the volatility of the underlying whatever index or stock to be highly volatile. So it is of common knowledge that for last few days Bank Nifty was fluctuating wildly. So I took my chance today morning, and the reason for taking this in the morning is that today is the expiry. So after 1 o'clock in the afternoon session there isn't much time left, and morning session is generally volatile. So these were some of the basic reasons. So I took my chance, and let us see. Now here it is a bit difficult to see. So if you just see the trades, I'll read one by one. Let us see. So this is showing the squaring up position. So if you can see, the buying has happened at 194 and 230. So let's add. So 194.7 plus 230.8, right? So this is the total premium, minus, because I have bought this, plus 66.55. this is when I exited. The Bank Nifty had fallen, so the call option had depreciated severely, doesn't matter, plus 448.75. so the put option had more than doubled. So this was my profit, so into 25, so that's what it was. So this was my profit. Of course, from the sell side, it is an intraday trade. In my scheme I get free intraday trade, but on the sell side there will be of course some for intraday trade, whatever charges are applicable, that doesn't even matter for me, because the trading volumes are not very high for me. So that's the profit that I made today from this one trade. Now the main reason for sharing all my trades is that I am basically making a trading journal, so that in future also I can come back and revisit these trades. You can also do this in Opstra, but then the Opstra does not allow, the free version does not allow you to save more than 2 trades. So so you will have to subscribe, and that is almost 1000 rupees a month. So the better option is that in YouTube I can make the videos and keep for my future reference, and if anybody is interested in this, that is nothing like it. So here I was basically trading the volatility. So thank you. And if you see what would have happened if I would have had hold on to this trade, now if you see today's position, I think we can see here, see, both have depreciated 92 to 92, so I would have lost severely. So this is something which, take a position, expect the a session to be volatile or a day to be volatile, then we make the profit and get out. Because if the volatility falls, then the call and put option buy positions will depreciate sharply. Please remember that. I think we all know that, but okay. So when we are taking buying call and put at the same strike, that is basically trading the volatility. Anyway, thank you.